Good morning, good afternoon, good evening, or good night. My name is Melvin, and I am here to talk about trading again. This is the third episode, and we have been talking about why you want to trade and how this interface works. I have talked a little bit about what you have to watch out for. What are these lines? These are the support and resistance lines, how you can set them up and what they imply. I showed a couple other drawing tools, which slowly I'm gonna, of course, show more of them. I told you about the volume indicator. Usually comes standard, but sometimes doesn't, so I also showed how you got it. And today I really want to talk about another basic indicator which I use a lot, which are wedges. And later I'm going to talk about some other indicators which you can add. And as you have a free version of TradingView, you can have up to three indicators. And indicators are not just the drawing things, they're basically the volume and then some two other things that you can add. So yeah, be smart about which ones you add, of course, because sometimes you want to have them all, and then they say, oh, you cannot. So yeah, basically, let's start with wedges. And wedges are basically triangles. Yeah, that's basically it. And you can draw them everywhere, of course, because we are humans and we can recognize patterns very easily. There's like books and books and books talking about patterns. Like you have like this head and shoulders pattern or cup and handle pattern. Then you have like these wedges, like descending wedges, ascending wedges, the one with a stable ground, stable resistance or stable support. The others both going to squeeze. And I don't know what they all say, and they all imply like a direction which it usually goes. And I can tell you, these patterns are nice to recognize. They are very helpful, but not to indicate which way it's gonna go. It's gonna indicate whether volatility is there or not, and that's basically everything that you are ever going to be able to really predict. Other stuff you can maybe predict it about, maybe 55% of the time. And volatility changes you can predict pretty often, and those are very handy to have. And after you get like an indicator that says, oh well, this is really going up now, there's now really a bullish trend, that's like that signifies that whatever you have been thinking might be right, and so you can play on it, and then you get mostly right. But it's not really predicting whether it goes up or down. It's predicting the situation that it goes up. It's predicting the situation that it goes down, and then depending on the actions of the market, work with that. So basically, if I say, oh, this is going like, for example, like I did in the last video, this can go like this. Or it can go like this. Yeah, then if I see it go up over here, for example, then I know that, then I can almost like guarantee myself there's going to be this situation. It can also be another situation, but these two are the most likely from what I've known from experience. So if it goes up to here, it can also go up immediately. So yeah, usually what you want to do is like also get a notification if it goes down or not. If it tests back, because if it tests back, then I know almost for certain that it goes up. It happens a lot that it goes there, and then the test is very, very strong. So if it's here, then I can go up. But I usually already, if it's already down to like here. Oh, usually I want to have it higher than that, so probably like here. I might just go in, and even though it might go down, I know it's gonna go up. And if it's not, then yeah, if it goes down here, then I just take my losses, and that's the loss of trading. So yeah, you go from 94 to 90, for example, or from 94 to 91, 94.6 to 91, and then you're like, oh no, this is too low for me. If it goes down here, then probably goes only downwards, and then you take your losses. You can do that. You can be very strong, like, oh, I know it's gonna go up, so I'm gonna stay in there. But yeah, I'm gonna stay in here because I'm here for long term. If you're like a day trader, you have to take your losses. If you're a swing trader, then you can stay for longer. If you're long term, why even bother trying to trade? Just know which markets you wanna have your assets on, and that's gonna be next episode probably. But yeah, the wedges are a very good indicator for squeezing the market, or basically seeing where the market goes down in volatility. So we have done the resistance and support lines, but now we can also just go to trend line and draw, for example, this trend line. And I have it in green, but I'll make it red. Well, maybe to see a difference between everything, I'll make it yellow. Yeah, yellow is a nice color, and so you can see whatever I'm doing. So this is basically sort of a trend line. I can put it in the middle, of course, to really signify a trend line, because it's going down. You can see it's a little bit of a channel down. I can also draw it over here. It's a bit of a channel downwards, and yeah, channel downwards is usually signifies a bearish trend, and a bearish trend stops eventually. And this line can be used in many different situations. This line as well. But this one is a support line. And support lines are, if they go down, not very interesting. Usually if they are like this or go up, then they are interesting. But this is just to signify that this is a channel downwards. And is now on the top of this channel. So yeah, as you can also have a channel just like horizontally, you can also have a channel, well, diagonally down or diagonally up. And yeah, it can break out like it can break out of these channels. That's how I like to look at it. But we're talking about wedges, so I'm gonna... can I make this invisible? No. Oh yeah, wait, I can hide it. I can hide. I don't know how to unhide it if I hide it. I'm never getting that back, am I? I'm not gonna hide, I'm just gonna leave it anyways. Where was I? Yeah, so we have this line, and this is basically sort of the resistance line for that channel, which I just drew. But what it also does is, if you have this support line, for example, where it touches a couple times, and together with this one, it makes a triangle. You can also go to this line and make a triangle, or this one and make a triangle. Depends which one you want. The safest option would be make it with this one. I'm also gonna expand it. But since I see that almost nothing touched over here, it's only touched over there, and it has been touching or tried to touch this line a couple times over here, and it has been stable over there. I think this line is a good line to keep in mind. This one for the wedge that I want to talk about, because a wedge is basically you have a stable line, so basically horizontal line, and you have one line that is diagonal. And it can also be flipped. For example, you can also have a wedge that is just a resistance line, and then for example, I'm not going to draw it like it's actually in the market, but like this. And then, you basically have a wedge upwards. And it makes a triangle, so I can maybe draw a triangle somewhere with something. I don't know. Is there a triangle? I've never drawn triangles in this. I usually just do it like this. Yeah, here, triangle. So yeah, I can just draw the triangle like this, I guess. Yeah, so this is the triangle that I was talking about. And this is basically, a downward wedge. And this is one of the patterns that people are, trying to recognize and use for their advantage. Because I believe that a lot of people thought that this wedge usually denotes that it goes up. And as you can see, it doesn't mean that it always goes up. It does try to get back, but that's something different. What I want to say with this is that, apart from these couple points, I actually wanted the wedge to go lower, right? Yeah, I thought I wanted to go lower with the wedge. I believe I wanted it to be this one. Yeah, I believe this was the best one. So yeah, as you can see, it touched a couple times, like here, tried it out, touch. So this is, I think this is a nice wedge. It could also be the one up there. It gives different implications, but it should give the same kind of summary. Basically, it's a downwards one, and what you see is that the volatility went from there, and it goes down, it goes up and down, but the volatility goes, grows smaller eventually. You can also see it in the volume. You can see, apart from this spike, that the volume has been up there. Now, together with this one and the other spikes, it has been going down a little bit. Doesn't necessarily that it is like that. Volume at lower, like 4 hours or something, is usually not the most reliable. Usually you watch day or week on volume. Day volumes are the most reliable, I believe. You see that it's a little bit squeezing the graph together. Apart from this is where it tried to break out, but it got back up. So basically, this is a kind of a test for, like, do we want to break out down? No, we are strong enough, we can get back up. And now it's still, kind of in this little edge. And that's why I also almost drew the other one, because, it's back in the other triangle as well. And it's very stable, and I believe that it might go up here or down there. So it's very short term. It's probably just going to be tomorrow. That it might happen, that it either goes down to stay in the wedge and then go back up, or it goes down and can go down again to here and then go up, or it can go up and then down and down. There's a lot of ways, of course, to see this, but at least what I know is that this is a sign that volatility is going to change. So either here, and I believe it's going to be here, is going to be a change in volatility. So now it's going to be a little bit stable, and then going to be either up very quickly or down very quickly as the first step, at least. I can still just draw that triangle because it implies the same thing. It went out a couple times. Might not be the most accurate thing. It went down, but it got back up, and it's still in this, and it's kind of stable. And this denotes there's going to be probably a change in volatility here. So another indicator for that the volatility is going to change a lot here. So I hope it's going to be going up until like 100, because that would be like about 10% profit, which is super nice. But that's what you can use wedges for. Might want to look at something else. For example, here, I'm not going to draw all the resistance lines and stuff, but you have this, it was now support line, but then it was a resistance line. You can draw this trend line from, for example, there, and then you can see that also here the graph gets a little bit squished. So this was the first rally, and the rallies get smaller and smaller, and at a certain point, it doesn't matter if it's here or there, but at a certain point it wants to break out, and if a wedge is going up like this, it's usually a sign. I said this was going up. No, it's usually this is a sign for it to go down, because it tests a certain line so many times that at a certain point it probably wants to go through. And doesn't happen all the time, but for example here it tests this line a lot and went through, as you can see, and now it went back up. So it might imply that there's still a lot of bullish indication. What I think, of course, I'm not saying that is definitely true. It might not even make sense sometimes, but in my head sometimes it makes sense what I'm saying. So if something is not clear, please ask in the comments. That's what I use wedges for. This is also just like a wedge, but instead of it going down, it goes up. And you can also have wedges not be with a support line, but also with just like two sides. I usually don't use those, because those are, you can almost always draw with one of them being horizontal. But for example, this sort of wedge, you could draw it like this. You could draw it like that, which means that it gets squeezed on both sides, and then it just converges faster, and then it wants to break out faster. But in this case, I would just probably have drawn it like this. because you can also see it getting there, then going back down to that point, and then breaking out. So yeah, doesn't really matter how you draw it. This one doesn't really give an indication whether it goes up or down. The other one might give a slight indication of going up and down. And this one was an indication of it going down, of course, because it was already going down, and it has been testing these lines a lot. So yeah, that was an indication for that. I hope it breaks through this trend line, because if it does, it is a very positive trend, because then this trend or this resistance line has been broken. And what I really like, I'm gonna now delete this triangle because I think it's not important anymore, and this one is also gonna go away because it's not important anymore. The trend line, which I also drew like this, the channel, I'm just gonna copy this and just move it down, because now it's like a channel. Really, they're like parallel to each other. So it might go through a couple times, but in general, this is like the trend line. And you can also just see this as, as I already said, as like the channels that are horizontal, but then not horizontal. So if this breaks through the resistance line of this channel, this diagonal channel, then it is a positive sign. And especially because it is already above this support line, and if it goes up, it might go to the next one and even go through that. So yeah, it would be lovely to see. And for me, this is a very nice positive indication, because it has broken through my support line, and it has been testing it a little bit. It is being stable at the point that I was expecting it to be stable, if you get what I mean, because yeah, this wedge was me thinking that it's going to be more stable. And if it would be a wedge with this lower one, then you might see this go down like this. But yeah, time will tell, of course. I just hope this is going to break through, and if not, then we are either going to stay in this channel or we're going to stay in this channel. It depends. So yeah, that's a little bit about the wedges and a little bit about channels. You can also have these channels like this. For example, this one is a really positive trend. You can probably draw this line. I already drew it, but like this also a little bit. It went through a little bit there, but it was a little bit of a, as you can see, a support of the channel that was below it, as you can see. And I can draw multiple of these in a sort of a channel. As you can see, this is also, yeah, it's not completely great, of course, but yeah, you can see this was a channel below, this is a channel above, and there's another channel above it. And you can draw this as well, and you have another channel, basically two if you want to draw it like from here. And now I can see there's not parallel at all. Oh yeah, I can also just do that. That's way more accurate. So yeah, you can also maybe draw that, or maybe draw this one, and you get a little bit of a sense of like the diagonal paths of the market, instead of just only the horizontal paths that it takes. So as you can see, this one is fairly nice to see that there was a nice positive trend over here. There's now been a breakthrough through this channel, which gives it a lot of volatility. It's been breaking through this big one, but also through this main channel. And then it started its own decline, its correction channel, which is probably going to go out somewhere in the future. Because eventually it will, this is a very strong support line, I would say. Eventually this can be seen as a wedge. Or, well, you can just see this channel ending with a wedge. You can also see it like that. So you can kind of combine your ideas. Well, I do that a lot, and well, it helped me a lot. I don't know if it's a very smart move. I think it's a very insightful move. Yeah, sometimes you can also go like this, because people do that sometimes as well. I don't know why. And then you can see like, oh, this is a very interesting point, because things are crossing. Like the market is crossing this line and this line, and it might, if it's, yeah, if this trend is still on there and it went through, but it goes up and it follows that trend, then, well, it still is inside this very nice positive trend, if you get what I mean. So even though it went up a lot and it corrected, it's still on this nice trend line, even though it went under a little bit. So yeah, you can do that. You can do that kind of stuff. I usually keep it a little bit chiller, because if you're gonna, you can use it as your own insight for maybe a more reason to maybe buy in or get out. But I think that having too many indicators over each other, yeah, can give a lot of mixed signals at certain points, which you don't want. And of course, you also have like this bias. You always want something to go up, so you have this bias of, if it goes up, it will go up a lot, or if it goes down, it only will go down a little bit, because that's our human bias. So you always have to keep that in mind. So yeah, that's why I use a lot of indicators, but also I don't want to have them all like cluttered like this. Even though this is maybe fun to see like this. I'm not going to keep this channel. This channel is done, this above level, because we've now changed it. But this line might be interesting. So I'm keeping this. And you can see that here it's still under. And it might grow under. It is also possible. And then maybe later break through, or it might just go down. You don't know. But they're all different kinds of indications. And yeah, they are used. I mean, this line, I'm not the only one that uses, this trend line. I'm not the only one that uses channels like this. I'm not the only one who has almost the same support lines as this. I've seen many other graphs at the time, and when I drew something and I like to compare it to someone else, and if it had a lot of overlap, then I know that at least I'm on the same line as a lot of other traders, which is either a disadvantage because you're on the line with a lot of other traders, which usually means that you're predictable, but in another way you also are on the right path, so you're not completely into the wild and just thinking, let's buy it. So yeah, that's a little bit on the wedges. I was also going to talk a little bit more about indicators. So this is very cluttered, so I'm gonna add a couple. So we already have the volume, and it's gonna become more cluttered, so keep that in mind. But the first ones that I'm gonna introduce, and I like to go to community scripts, and on top is you have a lot of these, and I like Chris Moody's MACD custom indicator multiple time frame stuff, because it has a lot of things combined. So you have the MACD in here, and the MACD stands for sorry, went into Dutch. What was it again? I think it stands for moving average convergence divergence. I think it's that's what it stands for. And that's basically what you see in this graph over here. So that's the convergence or divergence, and what it does, it is a moving average of 12 candles. So what it basically does is it averages the price of the last 12 candles, and that's the price. And the average of the last 26 candles. So basically in this 4-hour period, that's going to be like a week, I believe. I don't know for sure. But yeah, these two are then set against each other, and then the difference between the ones is going to be like the convergence or divergence. So basically, if they're very far apart, then they're, I believe, let me see. Oh yeah. So, okay. So what you see right here are I believe the moving averages above here. But you can see here, for example, the moving average of 26 is usually the one above, because it has to, it is a little bit slower in reacting to the movement. And it's the average of the moving average of 12 candles. You can see there's a pretty big gap between the two, and that's denoted by these candles over here, or basically this histogram under there. And as you can see that the shorter moving average is below the longer moving average, which indicates a little bit of a negative trend. And you can see it back here. It is indeed negative trend. But why is this very useful? Because you can, with these moving averages, you can easily see the change in the reversal of of a trend. So for example, here you have this very nice bullish trend, and you see that, well, it gives a little bit of an indication here of, well, maybe it's going to change. And so people, yeah, basically what they did is, you can basically put all your buy and sell options on these points, I would say. And then if you would sell here, then you would buy here, and you would sell here and buy here, and then sell here and then buy here, and then, yeah, in total, if you would do that constantly, you would, yeah, you could make money off of that. Because basically what this is a little bit of an indication of whether a trend has started or will start. So if I go look at it, if I would, for example, buy here, which is a very nice point to buy, by the way, because it's over here, and I would sell it over there, yeah, that's very high up. But you see it's already gone down a little bit, and then it wants me to buy again, and that was after this candle. So you miss a little bit of profit, but that doesn't matter because it is an indication, and the indication only has a little bit of delay, so it needs a confirmation. That was the word I was looking for a long time. But yeah, you can see here it says to buy again, and then if I sell again, that's over here. It's not a lot of money that I would have made if I would buy it in. I would buy it in here, right? Oh, then I still have a little bit, like, still almost 10%. So it's still a lot. And then it says buy here, of course. Yeah, this one is going to be hard because it's like usually it gives it at the end of the day, I believe. So yeah, usually would then buy here, and then it says sell. So here you would take a little bit of loss, I believe. Well, almost everything that you would gain from there, but it doesn't matter because you sold here, and then you buy here, and that's quite far down. Again, it's like $20 down. And then you could buy and sell, and doesn't really give a lot. Then you could buy here, and this is a very nice indication, for example. And then if you sell here, you get at the same price. Okay, so not every time it works, but it seems to be working a little bit, and it's at least a little bit of an indication of when you want to buy or when a trend is starting or stopping. So you don't have to completely rely on this, of course. You can, but I do not recommend completely relying on one indication. So for example, this was a very nice moment to get in. I got in, I believe, around here, so I'm a little bit slower than this indicator, but that is because I wanted to have this little confirmation of that it stays above here, because for me that's a better indicator than just saying that the MACD says that I have to. Yeah, I'm dragging this, so I'm gonna cut it a little bit short there, but that's basically the MACD. So yeah, positive, you can see here, you can also see the gap close, and then you can see it diverge, but then in the opposite side you can see it diverge again. So that gives a little bit of an indication of it might stop soon or it might start soon. So yeah, you can use this as well. I'm gonna also add another indicator, and then this is actually more indicators at once. Moving average is V2. What's this? Oh, that's also very nice. That wasn't really what I'm looking for, but that's basically also a moving average where if it goes up, it is green. If it goes down, it will be red, and it's, I believe, a moving average of like 50 or something. Anyways, I cannot find it. Let me look for it. Multi time frame. Oh wait, I just clicked on that. Sorry, give me a moment. Oh no, those are different. What? Okay. I was just looking at, I believe, what is very nice. SMA, EMA, multi, yeah, there we go. Oh, these are very, these are a lot. Moving average core, EMA, SMA. Yeah, so SMA stands for simple moving average, and EMA stands for exponential moving average. And I want to show them both, but I want to have them both in one indicator because I'm already at the limit, and that's a little bit sad. But this might be wait, multi SMA. Probably something like that. How long? That's very cluttery. Okay, I'll cut this short because it's already half an hour. I'll search for the right one and I'll talk a little bit about that in the next episode. And why it might be very interesting to use simple moving averages and exponential moving averages. And then maybe I'll go over some more indicators because I didn't have enough time in this video. And then in the next episode, so that's going to be episode 5, then I will talk a little bit more about, well, which coins you want to choose, because you can do this on every coin, but what makes a coin, or well, I call it coin, but basically it's just a market. What makes a market good or interesting? And that's of course for everyone different because everyone has another, has another goal, has another way of trading. But yeah, this is already 30 minutes long, so I'm gonna stop. I hope you liked it. I hope it wasn't too chaotic. As you can see, a lot has come into it. No, it's not very. It's like 4 lines has come into here, but I showed a lot. I showed you a little bit about how wedges work and how the channels might work in combination with like the idea of wedges, I showed you how the MACD works and what it is exactly. So hopefully these are very interesting. If you have any suggestions, please let me know. If you liked the video, please like it. If you want to see more of this, then please subscribe. I am always glad to see new people interested in this subject. And if I'm totally looking over something and I totally need to try something, please let me know, because I am still learning. As I said, it's as much as a learning process as it is for you right now. But I just have a little bit more experience on this, so I can teach you this. But if you know a little more about these things than me, then please let me know, and I might do something with it. So yeah, I hope a little bit that I'm. That's really a little bit about the goal of my channel, is that I create a little bit of community that together is gonna investigate the crypto market, how it works and what works and what doesn't work, and how you can identify stuff so that people who are really interested in this community can really look out for themselves when they're trying to trade, and myself included, of course. So I hope you like that idea. I'm not just here for, hey, I want the newest news on a certain coin and so I know if I have to buy it or not. No, go figure it out on yourself. I'm just gonna try to give you indications, give you a little bit of a head start on how to work with the environment and how to work with the with the indicators, and so you can make your own opinion. And if you think my opinion is wrong, then that's all right. Please let me know why it is wrong, and I might just say, oh yeah, you're totally right. Or I just said, no, I think this and that. So yeah, I'm dragging it again. So again, yeah, like the video if you like it, subscribe if you want to see the next episodes. And as I always like to say, good morning, good afternoon, good evening, or good night.